is Ivaylo and I'm managing one of the largest independent asset managers here in Bulgaria, ELANA Fund Management, and I'm also part of the board of the local CFA society. Now I have a very difficult task to keep you awake. After we had lunch, you probably have a bit of an urge to take a nap. But I believe this is a very interesting panel because from most of the people that are in the room are there living in the capital markets. So this is what we're going to talk about, the capital markets in the Central and Eastern European regions. I have an amazing lineup of speakers for you today. I'm going to introduce them and invite them one by one. Starting first with the lady, Ms. Pervin Dadashova, CFA. She is Director of Financial Stability Department of National Bank of Ukraine, where she oversees systemic risk analysis and the alignment of the Ukrainian banking regulations with EU standards. She holds a PhD in finance as well as has financial risk manager and certified actuarial analyst designation. She is also a published researcher and a senior lecturer at the Kyiv Mohyla Academy, where she continues to contribute to the academic and policy dimension of financial regulations in Ukraine. Next, please welcome Mr. Dimitris Orfanidis. He's head of overseas business development at the Cheng Fund Management. His company is a leading Chinese asset manager focusing on institutional asset management across the Asia-Pacific, EU, Switzerland and Gulf regions. Previously, he was a director of business development and the director of Chinese-Bulgarian industrial company in Shanghai. He holds a master's degree in history from Fudan University and bachelor's in economics from Bentley University. As well, he's done studies at Harvard and specialized training in EU trade policy at the College of Europe. Next, please welcome Mr. Razvan Pasol, CFA charter holder. He's general management at Patria Asset Management in Romania. In his role there, he oversees ETF funds and passive investment strategies. He has 12 years experience as a CEO of Intercapital Invest, and he was a member of the board of directors of the Central Depository in Romania from 2014 to 2018. He holds an MBA in finance from Pepperdine University, and as I mentioned, the CFA charter holder. And last but certainly not least, please welcome Mr. Ludwik Sobolewski. He is now a CEO of the alternative investment fund Better Europe and managing partner at Quality Advisory and the partner of the law firm Sobolewski Dabrovka Advocati. I hope I spelled this correct. But probably most of you in this hall know him from his previous roles as President and CEO of the Warsaw Stock Exchange from 2006 to 2013, and then CEO of the Bucharest Stock Exchange from 2014 from 2017. He's also been a Vice President of the National Depository for Securities. Without further, once again, so welcome. Please give a warm round of applause for our guests. I finished the introduction with Ludwik and I'm going to start my questions with him. It's a very interesting thing, CEO of 2 stock exchanges. How did this happen? Can you share some interesting stories from your journey as CEO of 2 of probably the most successful CEE capital markets?
Good afternoon. Thank you for the introduction and thank you for inviting me to join this discussion. How it happened, because yes, indeed, this is a rather rare situation. Quite frankly, I know one person only. My friend, unfortunately, he passed away a few years ago. He used to be the CEO of OMX. There was a stock exchange in Stockholm called OMX. It's not there anymore. I mean, there is a vibrant stock exchange there, but now is a part of NASDAQ. And then he became the CEO of Singapore, which is your territory. I think that the decisive factor, if I try to answer your question, a decisive factor was just the fact that we decided in Warsaw to adopt a strategy, or we had a concept at a certain point of time, around 2006, so it is roughly 20 years ago. I don't know how this time is. I don't know how it works. So 20 years ago we decided that, okay, we already have a stock market or a capital market. It was quite advanced. We had cash market segment and also derivatives. We had clearing and depository system, very well organized, effective, well functioning, and so on and so forth. But it was still, I would say, quite a local exchange or quite a local market. So actually the decision that we took was that we want to be a little bit more ambitious and to transform the stock exchange, meaning the whole ecosystem or the whole market, into something which will have definitely, which will become an international venue and will be recognized as such beyond the borders of the national market. And it was translated into different actions, like for instance, one of the most important was to attract foreign companies, either to primary or exclusive listings in Poland, or as dual listings. Dual listings were much less effective, obviously, turnover-wise, but well, it did well also because it was a good promotion, because many people, many institutions around us in Western Europe, in the US, they started realizing that, and also in our region, obviously, they started realizing that now Warsaw is building the local capital. This was the time when pension funds were created, and maybe this is a good opportunity if they are such, welcoming other issuers to list in Poland. Maybe this is a good opportunity. So in relatively short time, we attracted, I think, around 50 issuers, not only from a CEE region, but also from Sweden or even UK. We tried many countries, Israel, Kazakhstan. From our region, I wasn't successful only with Romania. So eventually I had to become the CEO of the Romanian Stock Exchange to put a foot in the door.
Get second chance.
Yes. So this was one thought and like a set of actions. This was also the time when we were very active in Ukraine, and we managed to bring to listing in Poland more than 10 companies from Ukraine. One of them was even covered of the main index WIG20. For some time we opened the representative office of the Warsaw Station in Kyiv. So this was a big adventure and big project. Also, we opened up the market for international brokers, because before, international brokers, big names, they used to trade, they used to send orders through local brokers. But we wanted really them to be more engaged. So through some regulatory changes, we incentivized them to become the members of the stock exchange directly, which was not always popular with the local brokers, to put it mildly. Not always popular, both mildly expressed, but it was good for the market. Around 2009, almost all of a sudden, but it wasn't like this because there was some work behind or underneath. We started having bigger turnover than Vienna. It was exactly 2009. I received a call from a phone call from a Polish journalist, and his question was, Mr. President, because you had bigger turnover than Vienna, is this something that will continue? Or I was completely unaware of this. I called my guy and I said to him, listen, because people are calling me that we have bigger turnover than Vienna. Check it. Oh, yeah, I will check it immediately. And it turned out that it was already something like this in the past. And then it was like a norm, right? And soon after that, we had a bigger turnover than all CEE exchanges combined. And this is until now, even with a wider gap. I'm telling this not exactly, because of being subject to my egocentrism, but rather to share with you that for us this was also a very mental and psychological turning point, because before, for us in Warsaw, Vienna Stock Exchange was like a, unreachable model, like something which was almost on a different planet, right? We were small, modest, a few years after this, infamous period before, so it was really something meaningful for us. Well, coming back to your answer, I seriously think that this is why my colleagues from Bucharest called me in 2013, because what Romania needed was not like a standard management of the stock exchange of the market, but they also needed a kind of transformation, even a little bit aggressive one. And of course the situation in Romania was much more complicated than in Poland, because in Romania the challenge was to take the market, the country, from the category of frontier markets to emerging markets. So it was like a shortcut for the strategy and for my mission I was entrusted with. Because Romania had, I would say, almost everything, because they have a wonderful class of professionals, educated, completely, I would even say, cosmopolitic, and good infrastructure. When I was arriving to Romania, I thought, okay, this will be third time in my life that I will have to replace the transactional system, because the first time was when which you mentioned, in the central depository, the second time when we were switching to New York Stock Exchange transactional system in Warsaw, and then I had this kind of expectation, negative expectation, that probably this is a total mess in Romania when it comes to technology. And then when I arrived, it turned out, no, technology is not a problem. Technology works well, by the way, homemade, and this was really admirable. Then I found out how strong Romania is when it comes to all, IT skills. But the problem was in numbers. Companies, big companies, free float, turnovers, liquidity. This was a big challenge. But yes, indeed, I would say that my colleagues, my Romanian colleagues, then some of them turned into friends. They had this strategic thinking that they need a guy who will not be too much involved in some local determinants, will be to a certain extent completely ignorant, and to a certain extent completely determined to achieve something. With the team, of course, because this is what I always underline, that this is a teamwork. So sorry, probably I exceeded my time, but you are smiling, so If you are smiling, then
probably what you didn't quite mention is that in the first half of your term as CEO of the Warsaw Stock Exchange, Polish market received advanced emerging market status. And I don't know how many of you in the hall are aware, it was mentioned in the panels before lunch. Actually, Poland is the only CEE country that has developed market status by FTSE Russell. It's still not recognized as developed by MSCI, but still this is a great success. But I guess the seeds for this success were sown during your tenure. With this in mind and with your experience in Romania, can you, what were the lessons that you believe smaller markets in the region can learn from what Romania and especially Poland achieved as market depth and recognition, etc., how they could create really deeper and more attractive capital markets? What are your advices for the other countries in the region?
Okay, I think I have a speech of about 2 hours on this subject. So I try to do this during 3 minutes or so. My reflection when it comes to these classifications, I mean, my view on the importance of these classifications, and probably you are all aware, I mean, about these grades: unclassified, frontier, emerging, which this emerging is usually divided into subcategories, and then developed markets. So Russell, FTSE Russell and MSCI, two rating agencies assigning these ratings. So my view has evolved, and now I think that to say that this is very, very important is technically correct, but we should not treat these labels or ratings as the most important things. Or, to be more precise, I think that passing from frontier to emerging market category is much more as like a step change than passing from emerging to developed. So, from frontier to emerging, this is something, yes, really, this is a quality change. This is a signal, okay, a wide category of investors who are even forbidden to look at frontier markets, now they can start considering investing in such markets. Between emerging and developed, this difference is much more subtle. For instance, we won, now I have a sudden thought, we won a lot when we also made an IPO of the Warsaw Stock Exchange, because Warsaw Stock Exchange is listed 2010, we made a spectacular IPO, which also was a symbolic sign that we have this ambition to, this claim to be an international market venue. So I remember myself talking to investors during the roadshow, and this was also written explicitly in our prospectus, that what we offer to investors. We offer two things. We offer regulations and safety and risk management typical for the developed markets, and rate of return on your investment typical for emerging markets. It was very catchy. I mean, it sounded like the best combination. It wasn't boring, and all the fundamental things were addressed, because yes, we could say everything is impeccable, if I may say so, when it comes to market practices, organization, technology, regulation, and so on. But the market still offers this above average rate of return. So for instance, when we got this promotion to develop, I wasn't sure whether we should be that much happy or satisfied. Okay, symbolically it was very positive, but then there was this calculation whether we will win more or lose more. Because maybe we will have funds normally investing in emerging markets, now they will rebalance their portfolio, and the question was whether it will be compensated enough by investors keen or completely tied up to developed markets. So generally I think that this is, in terms of the market outcome, this was not that crucial to be reclassified from emerging to developed. Maybe another thought unprepared before. So your question moved something, because now I think, because we all know what turbulent times we live in, so maybe, because I was recently on a panel in Poland when at the financial conference. A panel was about geopolitics, because now geopolitics is a subject everywhere. And one of the panelists answering a question from the moderator, he responded, no, you're wrong. The Third World War is already now, is now in the course, right? So maybe when people start thinking or visualizing intellectually the situation in this way, maybe this feature of a developed market, maybe it will be more significant, maybe, but probably even more significant is size. And this is the brutal truth. We need size to be treated seriously and really internationally by international players. So this was our perennial problem in Romania, because we had a wide market. We invited small companies. We created Aero, which was like an alter ego of New Connect in Poland. But MSCI was completely like, arithmetical, right? No. We appreciate it's really something, but we need 3 companies with this market cap, this free float, this liquidity ratio, and something more. So size is important, especially in those times with all possible risks. So for instance, the fact that Poland now made its entry to G20, we were this year first time participating as G20, even though it depends on some also FX currency, this sort of thing. So we are slightly before Switzerland now, so that's the 20th economy in nominal GDP. So, well, I think this might improve the perception, right? Because people would think, okay, if they are already that big, probably they are a little bit less vulnerable. So this is like, factors or nuances completely, it was not within our world before to take into account such nuances, right?
So now let's continue with Razvan. He works in a market that is one of the other, if I may say, at least personal opinion, of the success stories, the market development in the Central Eastern European region. So Razvan, what can you add on this topic? What do you believe are the steps that smaller markets, frontier markets like Bulgaria and most of the other CEE countries can do to at least go to emerging market status?
Hello everyone. So there's no recipe, that's for sure. It would be very easy if we had some boxes to tick and some flowchart, but it doesn't work that way. Yes, we're one of the larger markets in the region, but seen from Bucharest, we think it's still underdeveloped. We're looking to Poland. Everyone is looking to the larger market. Yeah, Poland is looking to Vienna. We're looking to Poland and so forth. I think it's mostly about issuers. It's very important to have interesting issuers because at the end of the day, what are we doing? We're selling a product as a financial industry. Yeah, we're selling shares in companies, or we're selling mutual funds or ETFs that invest in these shares. We're giving the public the option to invest in the companies that they know. So it's very important to work on the offering of issuers that you have on an exchange. In Romania, we've been fortunate for the state to list some very interesting companies in the energy sector. They did some very successful IPOs where the public was involved, the public participated. We also have some of the largest private companies listed on the exchange. So now if I go to Bucharest, if I go to the Bucharest Stock Exchange, I can buy shares in the largest bank, the largest telecom company, the largest real estate developer, really large energy companies, even on a regional level. So this is important. Yeah, the range, the quality, the size of issuers. And each country, has a different structure and maybe has different means to reach to this point. Then you also need to make it easy for investors to enter the market, and you need to explain the market. You need to educate the public because across the region, financial literacy continues to be a problem. Yeah. Now we have taken some steps in Romania. We had a mass privatization program where we gave free shares to every citizen over 18 in the 90s to many Romanian companies. We had these successful IPOs of state-owned companies, and the state had the foresight to list some important companies. We privatized the stock exchange. Yeah, this is I think this was important because a state-owned exchange in Romania would have maybe been less flexible. We had some good CEOs. Yeah, that's for the exchange. That's what we also did. So these are some things. But if I would focus on something, the quality of issuers, the range of issuers. People need to learn that they can buy shares in the companies that they know, in the bank that they go to, the telecom, the gas station, the company that operates the gas station. Make it easy for them, explain it to them, and they will come. They will come to the exchange, they will come to ETFs and mutual funds.
There is a funny story. Our countries joined the European Union at the same time. And I don't know if you remember, but we Bulgarians used to be very proud of this, that on numerous economic metrics, we were actually in front of Romania, but now we can't even see you far ahead. Probably it has something to do that you had a very successful fight with corruption. As far as I know, there is a government and a half in jail in Romania, and maybe hundreds of lower level officials. Now Bulgaria is once again proud of something. We joined the Eurozone on the 1st of January this year. Do you believe, what do you think is the future for Romania's currency, the leu? Are you willing to join the Eurozone now, or is actually having own currency and being able to absorb external economic shocks actually the thing that helped Romania grow for many years twice at the rate of Bulgaria?
Well, these are complex issues, and honestly, when it became clear that Bulgaria would join the Eurozone, I was actually a little bit envious. We in Romania are far behind in the adoption of the euro. So basically, there's no definite plan that says, yeah, in a number of 5 or 10 years or whatever, we will be joining. And it's, as mentioned, it's a complex issue. There's advantages and disadvantages to joining the euro, but it's mostly an advantage, I would say, and people here in this room will understand the importance of joining the euro for business, for finance. It will definitely make our lives easier with investors coming from abroad and investing in euros in our products. But then we have some structural issues that we need to take care of first, and the deficit is one of our most pressing issues right now, and the government is working hard to take care of it. You mentioned fighting corruption, and yes, we have had some results over the history in some periods, but the work is not done. The work is never done in this area. In this area, the work is never done, so there's lots of things to do. So, you know, with the Eurozone, yeah, I would like to see Romania there. It will take some time. I think it's important for the economy. I also personally think it's a very important symbolic gesture to join the EU. Yeah, this European Union project is very important, I would say, experiment historically. And the euro, besides its financial and economic value, has a symbolic meaning for European integration. And yes, I would like to see more European integration. I would like to see the United States of Europe at some point, not just the European Union. And the euro is definitely important in this respect. But in Romania, we need to take care of some other things first. Yes, many things have worked very well in terms of economy. Standards of living have been improved significantly over the year, and I think that's a very important metric besides, you know, GDP and things like that. But we need more work to be done in terms of, you know, even fighting corruption, deficits and things like these, and then we can think of joining the Eurozone just like Bulgaria did.
So we'll get back on one thing that you said about the European Unified Europe, but we'll get back to this a bit later. I would like to turn your eyes a bit to the east with Ukraine. One of the challenges that our guest Pervin has faced since the war began in 2022 was to preserve the Ukraine's financial system. Tell us, how does the financial system work under such conditions, and are there any effective capital markets operating in Ukraine currently?
First of all, thank you for invitation, and thank you for your interest for Ukraine and also for our experience. Sometimes we can share with benefits for other countries and jurisdictions. Probably it would sound very obvious, but since 2022 the world for Ukrainians has changed, not only in terms of obvious obstacles and difficulties we are facing because of the war, but what we also see is that there was a need to change the way of adaptation, and way of actually making strategic decisions. Because before 2022, despite we already had an experience of war before that, we were still thinking that there is a room for regular, normal way of making decisions, preparing for decisions, and you can kind of rely on what would be happening tomorrow. Now we understand that we live in a much more fragile world, and actually the key probably value is flexibility, adaptation, and efficiency in both of that. So what was actually happening in Ukraine with financial system in 2022? We had regular fears, which first of all the fear that everyone will lose confidence in the financial sector. Maybe one step further, I want to make additional comment that we don't have very deep financial markets in Ukraine. We have very underdeveloped capital market overall, and mostly we rely on the banking system when it comes to the financial resources for the economy. And of course we were very concerned specifically about the stability of financial sector and banking sector. We were afraid of deposit outflows, we were afraid of capital shortfall, some bankruptcies and everything. We had contingency plans prepared in 2014, and after that, because we already had invasion of Russia and we saw what may happen, we had huge crisis in 2014-15, which ended up with numerous bankruptcies in the banking sector, and we knew some stuff that we would have to do when crisis comes. In fact, what we saw, that all of those prepared contingency plan had to be adjusted based on what we've seen in 2022 and later. Because to some extent we already live in very difficult conditions, but despite that fact, we're still facing new and new challenges, and they are very different. Initially we were applying a set of quite regular limitations, which always painful for everyone, but they are necessary in order to keep funds inside, keep money in the country, keep the banking sector running, and a lot of those temporal measures are still in place, and they are crucial for the financial stability. First of all, I'm referring to capital controls. We have very strict capital controls until now, and hopefully we will be able to relieve them in some time, but it will depend on a lot of circumstances. Secondly, we were very concerned, and we were thinking about also operational resiliency. This is something that is very well pronounced right now, but it was not so into focus before the war in Ukraine started. And with all these additional cyber attacks, with development of artificial intelligence, with broad digitalization, the operational part of the financial sector becomes more important for everyone, including regulator. So we were focusing a lot on that. And these were like a couple of first measures to take. Close, when it's relevant, to close the system, prevent funds from running, and also assure somehow the operational resiliency. Fortunately, I'm happy that banks were able to maintain operations because we made them efficient. Since 2014, I mentioned when we had first invasion and crisis, we as a regulator, as a central bank, started to work on increasing the efficiency of the banking system. We were quite strict in our requirements. We were applying very severe shocks to the system to see how it survives those shocks. We were stress testing the system. We were increasing requirements numerous times. We also paid a lot of attention to corporate governance, which improved significantly. So technically, in 2021, we had a system which was focused on its efficiency and viability. Each institution was mostly interested in its own viability, productivity, efficiency, and it actually helped them to find the best optimal solutions in the situation when no one knows what is the best actually, and this is more of a route rather than an answer. And now I'm happy to say that yes, now we have running financial sector, banking sector first of all. We see that banks are well capitalized, very liquid. They increase lending despite all the risks around. This lending growth is sufficient and high in local comparison at least. Of course, we have very much to do in the future. But what is also important to highlight is that financial institutions, they are specifically paying attention to those areas which are the most relevant during the war, and they participate actively in restoration already, recovery. Because, for example, we have faced severe damages to some infrastructural objects, and banks are financing those industries which are there to actually reconstruct these specific objects, like in the energy sphere. Banks started to provide more funds to the defense sphere, which was very questionable before, and now it's kind of our reality, and banks do understand that they have to deal with it, so they are expanding their knowledges. And another example which is still relevant and which can highlight that we have some perspectives in terms of capital markets is that before the invasion we had less than 1 billion euro invested, households funds invested in bonds, governmental bonds. This is probably the only instrument we have on the market. Now the holdings increased 3 times, despite the fact that actually longer-term investments may be questionable and quite uncertain conditions. But still we see that there is a search for longer-term good yield investments from the household perspectives, which opens some possibility for further development of capital markets. This is probably all about the internal financing capacities. But I would also, of course, like to highlight that financial stability, macroeconomic stability would anyway not be possible without international support. So, of course, everyone is following and knows that we receive a lot of loans and grants from our partners from all over the world, but of course, especially from European colleagues right now, and this is something that I want to say once more. Thanks everyone for supporting Ukraine and our fight, because it's crucial. Additional to everything that we can do by ourselves, it's very important to understand and to see and feel that we are not alone in this fight. Thank you.
So, as a person that manages money, I actually remember that between the first invasion in 2014 and between that time and COVID, actually a few Ukrainian companies, I believe, were listed on Warsaw Stock Exchange, some of them in London. So we started seeing capital markets actually not only developing, but looking for outside investors. Obviously this stopped for the obvious reasons, but if we look beyond the war, which I'm sure everyone in this room hopes to end up as soon as possible, what do you believe would be the first steps in improving the Ukraine's financial markets and financial system overall?
Very important and crucial step would be some reforms we have to conduct in order to access European Union, but this may be a separate topic, maybe we will touch on that. But in order to answer what we should do to develop capital markets, first of all, we have to clearly understand that now we do receive a lot of funds from our official lenders, and this is directly related to the war. Hopefully the war will end, and I hope it would end sooner than later. But as soon as war ends, this inflow of funds will stop, and it should be substituted by internal capital, internal financial capacities, or preferably also with support of some international capital inflows that may be coming from different private sources. That's why we should be prepared. Additional to what we do in order to maintain economy, we also have to prepare infrastructure for these actually investments to come and to have place. Banks will anyway play the key role in post-war recovery, as we call it. By the way, based on some estimates, the needs for reconstruction of Ukraine, at least based on the World Bank estimates, these needs can exceed 500 billion euro. That's why it means like huge need for money. And banks, unfortunately, anyway, local banks will not be able to cover this completely. Even now, they are capable of doing some input, but it is limited because they have to develop new instruments, they have to grow, and they can cover only partially this market. That's why we have plans on what we can do infrastructurally. Unfortunately, right now we don't even have stock exchange. We had some before the invasion, but due to different reasons, all of them were closed or lost some licenses. So technically, we do have to start with very basic things. We have to create maybe stock exchange to somehow facilitate internal investments when they are ready, so to say, to come. And we also have some plans regarding additional infrastructural projects, some legislative changes that are needed actually to make legal instruments that exist in more developed markets. In banking sphere specifically, we opened for privatization of state-owned banks. We have quite high share of state-owned banks in the banking system, over 50%, and it is too much for the country. We don't need it. That's why we would like to prepare for privatization and attract foreign investors into the banking sector also. And we do believe that it is still to decide what will be the proper way to do so, either with private investor or with some public offerings. But anyway, I think that banks which are capitalized, profitable and stable, they can be quite attractive goals in order to try on how to deal with and attract foreign capital into the country.
As I mentioned, we are going slightly to the east geographically, and it's time to look further to the Far East, towards probably one of the most exciting regions in the world, whether you're in finance, in technology or other business area. This is Southeast Asia, or particularly China. We are lucky to have a panelist who first has his roots from Bulgaria, and second spent most of his adult life doing business in this region. Dimitris, you are actually also just about to move to Dubai, another very exciting region to do business, region going through rapid economic development and capital market development. Can you share what lessons and initiatives do you think the smaller markets in the CEE region can do to draw the attention of the deep-pocketed investors from China and from the Gulf region?
Thank you, Ivaylo, and good afternoon to everyone here in Sofia. Before I introduce our forum, which I think will help to address the question, as mentioned, yes, I'm Greek and Bulgarian, while operating out of China, a little bit of a peculiar geographical triangle. Nevertheless, I believe we can draw some parallels from this experience and perspective of a city, Hong Kong, which faces similar challenges to what we have been facing in Eastern Europe. Basically, how do we connect dynamic domestic markets to international capital without losing control in the context of China or forcing the investor to navigate completely different systems? Our company, Cheng, is amongst the oldest mutual fund houses to emerge out of China's industry. Under the umbrella of Cheng, we have in excess of 180 strategies, both onshore and offshore. The current AUM stands at above $90 billion and has experienced uninterrupted continuous growth over the last few years, which is a rather unique track record in China. We rank first in the industry when it comes to actively managed Chinese equities, and we're also amongst the very few qualified managers for the state-owned pension system in China. Headquartered in Shenzhen with a subsidiary in Hong Kong, from where we really have taken our rather recent internationalization efforts. We have taken a specific approach with priority focus on Southeast Asia and the Middle East. And rather than attempting to distribute already existing products, we seek strategic partnerships with leading institutions in order to replicate flagship products. It can be UCITS or DIFC domiciled funds in the UAE. This is generally known as white label. What separates us from other Chinese asset managers is our ability and willingness to do so on a reciprocal basis with our partners. A case example is the recent cooperation with Fullerton Fund Management. It's one of the most well-known fund houses out of Singapore, happens to be a subsidiary of Temasek, the sovereign wealth fund of Singapore. where we have taken over the management of their existing UCITS product, Chinese equities, and in return, we have taken one of their flagship strategies, happens to be global equities. We have replicated it in Hong Kong, and after a period of 1 year, this exact Hong Kong fund will have passporting rights into mainland China. So these are very compelling sort of partnerships we aim to achieve. We're very soon going to announce similar initiative, similar partnership with one of the leading Middle Eastern banking groups, and we're going to be launching simultaneously several products on each other's markets. I think notably, including some which are Sharia compliant. This is something very proud of because it has been my personal initiative. We are going to launch the very first actively managed Chinese equity fund that is Sharia compliant on the GCC market.
Maybe for the public, share a couple of sentences of what Sharia compliant means.
Sharia compliance is, well, Sharia finance in general, it's all-encompassing. I mean, in the Middle East, you have ATMs which are for the men and for the ladies. Yeah. In the context of mutual fund setup, it's actually quite simple. In context of China, there are publicly traded companies in China that exclusively do alcohol, such as Maotai. Maybe some people have heard about this company. Huge valuations, huge track record. At some point it was more valuable than LVMH, another company also involved with alcohol. So such a company is automatically excluded from Sharia portfolios. But the rest in China, whether it's industrials, technology, technically qualifies for Sharia compliance. Another example is a Sukuk Islamic bond fund. We're going to be launching in Hong Kong. So you can see this kind of cooperation we aim to achieve. And we look forward to replicate this successfully also in Europe and potentially other markets. So what lessons can we learn about connectivity from Hong Kong? And I try to offer some direct parallels and explain briefly mechanisms which I think most international institutions, non-Chinese institutions, are not familiar with. Technically, until 2014, China's A-share market was de facto walled off from international investors. Yes, there was a QFII quota system. Legally, the doors were open, but the operational friction, be it paperwork, quotas, custody complexity, kept most of the global capital on the sidelines. I would try to briefly mention two of the major connectivity innovations from Hong Kong. First one is the Stock Connect, launched in 2014 in Shanghai first, followed by Shenzhen 2016. Stock Connect is at its core a mutual market access program. It creates a closed-loop clearing and settlement link between the Hong Kong exchanges and the mainland exchange. It works both ways, northbound and southbound. Northbound is international money flowing into China's A-share market, and currently average on a daily turnover close to $40 billion US. That's the latest month is 302 billion RMB, which is definitely close to $40 billion US, and that's a nearly 40% year-on-year development. Southbound is China's mainland money flowing into Hong Kong. The channel has grown from less than 1 billion daily in 2014 to over 121 billion Hong Kong dollars by the end of last year. Stock Connect's success is an elegant solution to a big problem, opening China's market to the world while maintaining capital account control. It has really transformed the landscape of both Hong Kong and mainland China. The second pillar is mutual recognitions of funds, or what we call MRF. If Stock Connect is about connecting equity markets, MRF is about connecting the products themselves. It's a fund passport system between Hong Kong and mainland China. Really an authorization. If a fund has been authorized by the Hong Kong Securities and Futures Commission, it can apply for a streamlined approval from the Chinese regulator, and once approved, the same fund, the same strategy, same manager, same portfolio can be sold directly to both institutional and retail clients in China. In January of last year, this scheme went through upgrade. We call it MRF 2.0. 3 key changes. First, the proportion of a Hong Kong fund that can be raised from mainland China was raised from 50 to 80%. Second, the rules on delegating investment management to overseas affiliates were relaxed, meaning Hong Kong funds which invest in European, US assets can now be managed abroad and can be passported northbound. And the third, the quota was lifted for northbound flows. The result has been dramatic. As of the end of last year, the total assets under management, and I have the data just for 44 northbound MRF funds, has reached 935 billion US dollars. The Hong Kong experience basically says, remove the fiction, build the links, and the capital will follow. In the context of Europe, we have our framework. UCITS is the equivalent. But I guess in practice, friction remains. Different trading rules, different platforms, different supervisory practices. In the same time, I understand from as much as I can follow what's happening, they are being addressed, those points. And I think it would be very valuable for Ludwik or maybe Razvan as a close specialist to maybe share a little bit about the EU market integration package. I think this was just mentioned December last year. Yeah.
This is a topic that we're going to cover a bit later in the panel. Now, since you have the microphone, last night we were talking about what you actually do. You're a business development manager, and now Europe has been in your focus. But from what I understood, maybe now mine is working. So from what I understood, Central Eastern Europe is still away from your radar, away from your investment destinations. Can you give me your opinion on what needs to happen in the regional markets in order for them to be attractive for you and for your company for business development?
Chinese institutional investors, I believe, still see Eastern Europe as a small satellite allocation. As part of a broader exposure to Europe or emerging markets. It's under-owned, under-researched, but I think it can act as both diversification and alpha on top of existing European allocations. Chinese, they care about a clear economic story, easy access, low political headaches. I think the higher than Western Europe growth is a good point. I think Poland is key in this regard. And to a lesser extent, I think there is some value in the assumptions such as Hungary, Serbia being like more closely politically aligned. But I think this is kind of fading. The situation is very dynamic. And I think opinions on China are changing constantly. But if we were to talk about products, because we did talk about this yesterday evening, yeah, I think that it's actually feasible. I think it's possible that if Southeast Europe was united as one product, one ETF, let's say, I think that could have traction in China. Yeah.
Okay, so probably some of you in this room know about a project that had, let's say, the bold idea to unify the regional markets. It was called CEE link. I don't know how many of you remember this. Ludwik, you should be well aware with this project, I believe. Unfortunately, it failed. And can you give us probably your views on why didn't it happen? And can it be revived in some form? What is the path now for connectivity between Central Eastern European exchanges that can lead to something that would be interesting for international investors in the sense that Dimitris shared it might be?
If I am to say the whole truth,
yeah, please.
Then I have to say that I was very skeptical about this link project. And generally I didn't want Bucharest Stock Exchange, because it was at the time when I was in Bucharest, to participate in this. Although I remember I also was quite hesitant about this. I think I put once PVP to this project and we withdrew it, and then finally I think we abstained from. Or it was like participation, giving signals, no, we don't want, really. It was a little bit politically, in the sense of political business, delicate, because it was something invented by people from EBRD, and EBRD was a shareholder of the Bucharest Stock Exchange. Moreover, a shareholder which we managed to convince to become the shareholder, because we treated their participation as instrumental in this endeavor to get the whole market modernized. And yeah, we had great hopes related to this presence of EBRD in the shareholding structure of the Bucharest Stock Exchange, which, by the way, is also a listed company on its own floor. So I had to somehow say no to my very prominent and generally very friendly, we are friends, shareholder to the invention, which was not even totally bureaucratical, because they were intelligent, smart people, but definitely without like kind of regional feel. And they were not aware how complex it would be to really put all markets of Southeastern Europe, more or less this sub-region, into one platform, one clearing, one system. So with all the emotional layers, national prides, ambitions, all mental luggage that we took from the previous era to the modern capitalism, and so on and so forth. Plus, on a much more cynical note, and I'm risking that you will chase me from this conference, or at least refuse to... I didn't see any plausible reason to help smaller markets, even much smaller than Bucharest at that time. So I don't know, maybe I refrain from using the names, or maybe I will not, because we are here professionals. So I don't know, Skopje, or I remember.
No names.
Yeah, okay, no names. Yeah, no names. Yes. So, because it was visibly something that if it was to help a market as a result of this initiative, if it really comes true, which I hopefully thought was not possible, but if, so only the smallest markets could maybe benefit something from this. So it was generally not in the egoistic interest of the Romanian market. And I don't really think that any such alliance or cooperation could really be successfully created in the future. Believe me, I know a lot of such stories and concepts, and by the way, we were also in this 2006 or 7 when it comes to this new strategy of the Warsaw Stock Exchange, we were driven by this thought. No, it doesn't make any sense to get into this sort of alliances, building common platforms, spending decades on this, spending a lot of money, and then finally looking at the results, and as Winston Churchill said, however good the strategy is, you should occasionally look at the results. So we thought in advance that these results will not be, worth enough. When it comes to small markets, I also think that, every market, whether it's a larger one or small, has its problems, and some of these problems are quite identical for all of us. Take Warsaw, for instance. The market capitalization of the Warsaw Stock Exchange is now roughly 300 billion euro for domestic companies, for domestic and international twice as much. And the daily turnover is in equities market is 500 million, 600 million euros. So it's decent, right? There is still a big gap, enormous gap between us and Deutsche Börse, Euronext, LSE, even BME, Bolsa de Mercado Español. They change the name all the time. Madrid Stock Exchange. But these numbers are really it's quite something, right? But, for instance, what we see in Poland is that the market cap in equities to national GDP ratio dropped below 30%. What it tells us, that the role of the stock exchange, despite the fact that we have 2 million securities accounts, despite the fact that there is a big interest, or relatively big interest of individual investors in being the investors in the local exchange offering, despite the fact that 50 to 60% of the turnover generated by foreign investors, which by the way is also a source of being worried a little bit whether we are not too much dependent on these flows coming from abroad. So, but if we look on all of this from a more macro perspective, then Polish economy is still very, very heavily financed by banks, by the banking sector. Because this indicator, market cap, in equities to GDP, illustrates this relative weight or significance of the market for financial instruments, right? So we have this kind of a working sign, and also this is a kind of information. You still have a lot of work ahead of you, right? And now there is a big discussion. We have celebrated last week 35th anniversary of the Warsaw Stock Exchange, and there was a big discussion, like it is all the time, what to do in order to increase to improve some indicators, to make the capital market more important for the whole economy. And I think that this is a common problem, because when I look at small exchanges, I am tempted to say, look, small exchanges will never be substantially bigger. So this is an illusion, which also can make us waste time, energy, and cost us frustration. small exchanges will never be big exchanges because they are too small. Sorry for this, colloquial talk. So, and the economy is too small. So it will never be an international venue for like mobilizing funding and being on the radar of the biggest investors with bigger, or somebody said, deep pockets, right? Yeah, but everyone is allowed, invited, and has a big chance to make a domestic capital market something which will be already notable for the local economy. So we don't have to think in this binary way. Either we are big and everyone speaks about us, or we don't have anything. No, we can have these local engines providing entrepreneurs with capital, with visibility, also bringing them to higher level when it comes to corporate governance, market practices, commercial practices, and this sort of thing. Sounds less ambitious, less spectacular, but we don't have to be Eastern Europeans in everything. We can be sometimes, called Scandinavians, and okay, it will be already something.
I may not like everything you said, but I have to agree with a lot of what you said. So most of these markets are small. Unfortunately, our countries are growing economically, but most of the countries in the region we face the same demographic problem, that our populations are declining, which puts a natural cap on the growth that we can achieve. Anyway, but doesn't this make actually unification of the markets the only possible way for them to survive in the long run? Otherwise we'll become obsolete. US markets will grow, Western European markets will grow, Chinese markets will grow, etc. Otherwise we'll just be small markets. We'll have our success stories. By the way, I'm not sure how many of you are aware that Razvan's company, Patria Asset Management, has probably the most successful ETF on Central Eastern European Stock Index. It's following the Bucharest Index. It has, 1.2 billion lei, which is 250-300 million euros. Yeah. But if we don't, if we don't come together, what is the future of the local markets? So we heard Ludwik, any of the other participants, or if you want to add something, Ludwik.
You're asking?
Yeah, everyone.
Oh, okay.
Yeah. We don't come together as a single market.
Trying to formulate it in a, let's say, systemic way, I would say that we are facing probably three scenarios. Scenario one, everything will stay more or less as it is for the next 20 years or 30 years. Or 10 years, because maybe in 10 years a lot of things will be replaced by AI and it will completely demolish all our views about the future, and we will be thinking how it was possible that we thought in this way. Naive way. Yeah, okay, so maybe I should definitely shorten this time horizon to a couple of years. So one scenario is that everything will be more or less status quo. Another scenario is that, yes, as it was mentioned, European Union has another plan which I think is quite utopian, to create a capital market union and maybe one stock exchange, pan-European stock exchange, so forth. Well, I think there are many arguments that would rather result in a forecast that this will not happen. And the first scenario is that there will be one big boy who will impose or convince other players that initiative to integrate at least the leading markets in Europe. Moreover, I see already this player because Euronext has had great successes in integrating other markets. So Dublin, Brussels, Amsterdam, Lisbon. So for me, this is probably the most likely scenario, but it doesn't mean that such a mastodont as Euronext currently is will be interested in eating up or taking over micro exchanges, right? That likes the business rationale, even though it's not excluded that not for the business, it will not be driven by financial calculation, but by a simple fact. This is a unique chance to really have everything under one umbrella. So they have to come to terms with the Germans, as it has been in the past on many occasions, in many areas, and if this happens, so there will be this big agreement between France and Germany supporting Euronext, who is definitely the leader. LSE does not really count now, sadly. Then this is my strongest scenario in terms of probability.
The other panelists, what are your thoughts on the future of the CEE markets?
Okay, can I say a few words? It really depends on what we want to achieve with this market integration. And I like the thing that Ludwik said, that there's a role even for small exchanges on their own markets. Why do we need an exchange? Why do we need a capital market? Primarily to finance the local companies and to give local investors a way to invest their savings, right? So from this perspective, there's a strong role for a Bulgarian stock exchange in Bulgaria, offering Bulgarian companies and investors this possibility, and in Romania, and so forth, yeah. And I think we need to reach that potential first, before thinking of other grander plans. And we're far from that potential. And some of the smaller countries here are even further away, and there's a lot of work to do. In terms of integration, I don't think it's feasible to see a merger of exchanges, just like you said. That's utopic. I mean, with so many different governments and regulations and so forth, it's not happening. I also don't see it advantageous to have a large player acquire all of these exchanges, because I have to ask, then will a company from Bulgaria can get easily listed on Euronext or one of these larger markets? Would it be easier for a random person in, I don't know, Romania to invest on these markets? Or would they be better served to some extent by the local exchanges? So what I think should happen is, anyway, before any such larger or grand plans, is just simplify procedure, simplify the way to invest from Romania to Bulgaria, from Slovenia to, I don't know, North Macedonia, and so forth. Make it easier for companies to access capital, for investors to invest. That's what I would do first.
If I make a couple of words or thoughts on that, first of all, I should say that I'm a regulator, which means that I like rules, and I think that more rules we have, better is financial system. But I do agree with everything that was said on the simplification, unification, and to some extent this anchor of European Union, for example, in terms also in regulation. It helps us to develop procedures in such a way that our companies, I can speak more of course about financial sector, but it is not so internationally active, but not only in financial sphere, in all sphere, our companies are more able to somehow provide business elsewhere. Ludwik already mentioned that some Ukrainian companies years ago, they outgrew the Ukrainian market so that they were fighting for some finance opportunity on external stock exchanges, and they were quite interesting for investors. And we still have a lot of companies that actually, especially after the invasions, they continued to work internally, but they started to search for some opportunities abroad. And with integration, with similar rules, even if they are somehow complex, we can give them more possibilities to do so, to raise funds elsewhere, especially when local markets are not able to support them due to different reasons. That's why we are very interested in integration, of European integration. We do have very ambitious plan in this regards. We face a lot of difficulties on this way, but anyway, I think that I cannot say that I do believe in like huge, for example, stock exchange or something that can be easily created within the region in order to somehow beat the major players. But maybe I'm not very optimistic because this is not my sphere. But I do think that any opportunity we can give with the integration to companies to find their niches, and actually maybe companies would do something that, so to say, regulators, for example, or officials cannot do for them. So I do believe in efforts for integration that they would give results.
So maybe what can we take as a common ground is actually the interconnectivity would be more important, and maybe the example that Dimitris gave with Hong Kong and mainland China is a model that can work here. We still have probably 10 minutes, so now I would like to invite our public to ask their questions to our panelists. So don't be shy, the floor is yours now. Ludwik, you scared them. I'm not sure. Any questions over there? Някой може да занесем залата?
Thank you for the interesting discussion. My question is towards probably Razvan, but also Sobolewski. If the state wasn't involved in Romania in actually listing companies, do you think that the general public itself would invest on the market, or how big of a factor was that?
Okay, very good question. I would say it was a big factor, but it wasn't necessarily the only one. We do have, besides the state-owned companies, we do have a number of private companies that are very attractive. And I will give the example of the largest bank that we have, Banca Transilvania. This bank was founded a long time ago. It was founded on the capital market, and it has been listed for a long time, and it has provided good returns for an increasing number of investors for a long time. We do have a significant number of privately owned companies and privately funded companies on the exchange. So the role of the state was very important, but it's not the single factor of success. Yeah? Private companies, privately founded companies have their important role for the success as well.
Well, as Razvan said, I would only add that in 1991 we had first 5 companies listed on the Warsaw Stock Exchange, and they were, of course, in the frame of the privatization program. So they were all state-owned. But in 1991 we didn't have any privately owned companies, any of any size, right? So it could have been only from privatization, but it didn't be successful and we wouldn't have had a stock exchange if not the positive or even enthusiastic reaction of mainly retail, meaning individual investors. Because, okay, we had some interest from abroad because this was also on the wave of this, oh, Poland, communism collapsing, new markets, new opportunities. We will be earning probably money because they don't have any idea how to do a lot of things. No local capital, not at all. Some brokers. But the response of the population was really enthusiastic. Queues at night of people subscribing for the shares, which they didn't see. Can you imagine that we had such a feeling then that will people buy shares that is impossible to see because the whole system was dematerialized from the scratch. We were the second market in the world after France, which made it in a very absolute manner. So yeah, but of course this is like privatization was like providing the market with instruments with investable companies and projects. Well, it's not the only factor, because you have to open the market for what also Razvan mentioned, I think, small, medium companies, regulatory conditions, alternative markets, just for them, as we did in 2007 with New Connect in Warsaw and the Aero market in 2000, when it was 2015, I think, 14-15, right? By the way, why we took this decision in Romania? Because we had some steps of the Romanian government towards privatization. So then we had Romgaz, Nuclearelectrica, Electrica, the stakes owned by the Romanian state put on the market, but then they stopped. Not anymore. So then I thought, okay, what now? What will we now doing? Because I was counting on this. We were road showing Romania is now rising and so on, and then it was stopped. So by necessity we created Aero, and after some cooler years now, I think it's now a big success, just like in Poland. And moreover, in Poland we also, for political reasons, purely like politics. We have had no more privatization since 2015. Yeah. So this is like a factual test, right? And of course, we also had stagnation for many reasons, but now there is a clear better times. So, for instance, we had 5 debuts on the main market this year, completely private companies, but allow me to say one more thought, because I think that there is a very important symptom of whether there is a capital market or it is rather a theoretical figure. And this is something which is not that strictly connected to figures, to numbers. If there is a situation that something is happening, there are transactions from time to time, it means that there is life. I would quote, but I'm forbidden to, some markets in the region which are even bigger than Romania, for instance, but there is like, silence there. Silence. No IPOs. Yeah, at least 2 markets I have in mind. So there is no life, right? And no life, meaning that in the perception of international players, it also sends the following communication. Okay, we will be still investing in some 2 or 3 blue chips present in this market, but generally we are doing this almost automatically. We are not expecting anything more from this market. Whereas, so this is an aspiration Bulgaria might have. You don't have to be a big thing to draw attention.
Any other questions from the public? We have a hand there. A few eager hands, actually.
Hello. I was comfortable also. I disagree maybe with the concept that, yeah, local regulations, yes, it's quite tricky to get the pan-European exchange, who's going to hold the power, who's going to hold the capital, blah, blah, blah. But what prevents us from having like a central clear, central market infrastructure, you name it, the vehicle that would have like smart route into the local exchanges, aggregate volumes, you know, data from all the exchanges in one place, that would remove this friction from me registering in the local market and, you know, looking for the opportunities and the issues in, you know, the neighboring country, and just this central market infrastructure will take care of this, basically having the omnibus account with the every exchange netted daily. I don't see why that is a possible in utopia, as you say. Could you maybe disillusion me?
I mean, it sounds like a nice plan, but let's say that, you know, tomorrow we decide to do this. How will it work in practice? You know, you would need governments enacting laws in all of these countries to change the entire infrastructure. Who would support this? The local exchanges wouldn't, the local institutions wouldn't. And there's not only advantages to such a strategy. Because let's say a big player comes and unifies the post-trading infrastructure.
Yeah.
What would the fees be? This foreign player, large player, would charge higher fees. And
not necessarily, it could be the market infrastructure that is not for profit. It's like built by central security depositories on every country to provide us central clearing.
But the central depository in Romania is a private institution, so is the stock exchange. We don't have NGOs.
Exactly, and they benefit from this because they will remove friction between retail investors all over Europe. So in the end, me investing, like if I'm a local exchange, me investing in this pan-European infrastructure would bring me more frictionless flows of capital, like from, you know, Belgian dentist, or you name them.
Okay, what I'm trying to say is that in practice, this is a lot more complicated than it seems. Yes, this would be a huge project. Just think in terms of IT, of investments, of procedural regulations. All these countries would need first to agree on this. Then there would be a huge initial investment in terms of IT and logistics and operations and so forth. So it's a really complex
I'm
project.
not downplaying, you know, the scale of it, but I'm just like, why is that impossible? You know, we build bigger projects as humanity.
Maybe Ludwik can add a few words. Because
Yeah.
managed to exchange.
Almost everything is possible. The question is whether it's worth doing, right? Because the thing is that, I mean, I'm putting aside what already Razvan suggested. I'm putting aside, and believe me, I worked 11 years at this, you know, post-trading infrastructure, that consolidating or integrating clearing and settlement and custody functions and servicing of the rights of the holders of financial instruments is incomparably more complicated than consolidating or integrating or uniting the front ends. Back end is like infinitely more complex than what is visible. I mean, the stock exchanges. But the main point is different. The main point is different because, as I said, everything is possible. So we could try, even though, yes, we had such attempts, but there were numerous reasons when it turned out that this is really too costly or close to impossible. For instance, one of the reasons was that we have different currencies in the region. We have euro, we have national currencies. I mean, one of on a long list of obstacles. But the main issue is why we should do it, because all these projects aiming at integration of the markets in the region or in Europe have very clear objective. This objective is that we want to have like this small table, I mean this table. This table would be representing all financial instruments traded on organized market in a region or maybe even in the whole European Union.
Yeah, we want to
So we want to create unified entry point, I mean unified platforms with entry points, with channels, standardized channels of access to intermediaries, and via the intermediaries to end investors. And we want them to see the whole European offering, like to have one big shop with everything, and they don't even would have to think, are we now trading on Amsterdam Stock Exchange or Warsaw or somewhere that I don't even where it lies geographically. But this is what we used to do on this desk for the last 5 years. So this is the goal. This is the goal, which is not the final stage, because after we create this, then logically we have to integrate the back office and the post-trading infrastructure. Because if we went through this whole road and end up with having, you know, all these exchanges maybe not disappearing as brands or even maybe headquarters, but they disappeared with all these, you know, particularities. We have one system, one rule, one set of rules, one treatment of orders, all the processes are completely unified. So it means we have one market. We have to figure out a name for this, and we are like EU stock exchange, something like this. So then logically comes that we should, in order to decrease the cost and decrease the risk and end up with the same standardization that we offered to direct market participants, we want to have the same offering with this standardization for the clearing members, right? So then we have to make a move when it comes to what's behind, which is by the way even more important. This will be another obstacle, because you know you can relatively easily create a common platform, but if something fails there, then this is really might be a catastrophe for the whole market. So my point is, this is the first step, and the second step is to make a more efficient post-trading infrastructure. But we should not start from the post-trading infrastructure if we are not yet certain that we will end up with this unified platform. Because what we need, we don't need to be amused ourselves but by integrating. Difficult by, you know, tackling difficult projects. We want something like this. Deep and large European market in financial instruments. This is our goal. So the route to this leads through having this one single platform with the instrument displayed, with all the things which I mentioned before, and then logically some brave or insane people will say, okay, now we really have to take care of something which is even much more difficult, how to replace these, you know, entities responsible for. Remember that we also have CCPs in Europe, so responsibility of own capital, right? And then try to reconcile the interest of Bulgaria, who would like that this big animal would guarantee, and vice versa. Sorry, but
Can you wrap up?
yeah, my rights have been cut. free expression.
I appreciate your enthusiasm. Probably people like you can do this connectivity, but since we are out of time, behind schedule actually, please, the gentlemen are here staying until the end of the conference. Find me and then we'll continue this discussion. So please give a round of applause for our panelists today. We are moving to the next panel. I want to invite Nikolai Vanyov here, my friend and fellow CFA board member, to introduce his panelists, and thanks to my guests.